Hello everyone and welcome back to the channel. Have you ever wondered what happens during the months of August and September, but more importantly, what Wall Street tends to do ahead of a crash or ahead of a pullback? Well, at the moment, we're in a bull run, and we can see that by all-time highs being reached on both the SP 500 and of course the Nasdaq. We'll be covering that and more, and whether we get a resumption to the community trend line before any market pullback. A lot's going to be in this video. Stay tuned. Okay guys, one of the best places that we can always start when reviewing the market and understanding what may happen for the week ahead is going to be to look at the heat map. And here we have the SP 500, and straight away you'll notice Google and Facebook off the back of Twitter and Snapchat, great news, did very, very well. We had an inkling that maybe social medias would continue to be profitable and continue to add, and they certainly did over the last quarter. Strong results there, and that's led to, of course, some great results coming through on the indices in the Friday close. We'll have a look here at the Nasdaq and the SP 500 up over 1% each, and the Dow Jones and IWM also up into the Friday close, causing all-time highs on many of those indices. Which were the strongest sectors? Well, it was communications out in front, XLC, XLK, and really the lacking ones were XLF, which is financials, and of course the energy sector as well. So it's important to note that it wasn't across the board that everything was so strong. It was purely in those technological kind of companies. Now we move over here to fear and greed index, and this is something that a lot of people are covering right now. Now I'm of a belief that generally when there is a lot of fear in the market, it's hard to crash the market. If you've traded for a long time, let's say you've traded for 10, 12 years, during the first points maybe of 2011, 2012, 2013, etc., there was actually a ton of fear in the market. There was a lot of puts, there was a lot of big calls for the market to crash, for it to get bashed around. And of course it did not during that period. It had pullbacks like any market would, but it didn't have full-on crashes. Now there are a whole bunch of different indicators that you can see here on this particular index, but there's some strange things going on where a lot of them are actually showing fear. So if we go down to the oscillator, this is one of the first times I've seen in a long time where we've got an oscillator down here in the 20, yet the market is still going up. And I think probably what I'm worried most about is got to be stock price breadth, which is here. And of course, you know, how many options are getting put in. Is there a lot of puts going through in this section? So I think stock price breadth is definitely a great consideration. This happened last year where it went negative. It went down into that 0.5%. And then around that August period, very similar to where we are right now, it was declining. And this was led, of course, by an index that was getting pushed through technology. We'll move over here to the fear greed index of the sentiment on the Twitters right now. And again, when it's really greedy, that tends to be the point where it pulls back. Notice over here, early in February, we got a mass greed rating here on the black line, which is of course the general thought process in Twitter and everyone else in the social medias. And then just after that mass greed line, we actually saw the blue line here, which is the Nasdaq, start to fall off. Whenever the market gets really greedy, it usually causes stagnation. And right now we're kind of in a neutral to fearing zone. So again, it points to potentially a little bit more bullish action and possibly a buy the rumor, sell the fact style event. Will that happen? Well, it all comes down to earnings, and here they are. So we have Tesla. Wow, it's a big week, by the way, guys. We have Tesla after the close. We've got Apple after the close Tuesday, AMD, Microsoft, Google, Amazon. It doesn't get any bigger than this type of earnings week. These earnings weeks make or break markets. And if they do come out with the goods and we see those initial bursts, we may hit key critical trend lines that we'll be talking about throughout this video that could then cause the correction. Now, we know that certain months of the year are bad ones. We also know that statistically after post-elections, we have things like August being a bad month, September being a bad month. The last 10 years, very similar kind of stats here. The past 20 years, very similar kind of stats here. And the past 50 years, very similar stats here. And I caution everyone, I always say this, one of the things that we look at is we don't want to just, go in and say, oh, okay, I know August, September are terrible months. I'm going to remove everything from the market and I play this statistic. If you do that, you will generally not do as well as you think you might, because you might say, okay, well, August, September are bad. I'm going to put puts in. And you know what, statistically might be okay, but you may also be paying for the value or the volume there and the volatility itself. However, what you want to be doing here is you want to say, okay, do I want to put in more risk into these types of months, or do I prefer to hold back and then wait for it to play out and then make a decision? You'd be surprised how often the technical analysis might be going bullish into the beginning of this period and then switch over. We made a big call last year on this when we were talking about August, September. It ended up working out, and of course it was the beginning of a decent pullback through the Nasdaq, which gave a lot of opportunity. So remember, use the data, use the statistics, use the analysis, bring it together with your technical analysis, and the technical analysis is going to show you the way. And then you can pair that up to say, okay, we expect a larger correction over this period than maybe just a 2% pullback. You know what I mean? It's about putting together, hey, we know this pulls back a certain percentage on average. Let's call it 5 to 8%, maybe 10%. If that happens and we get the correct signs of bear, maybe we don't just randomly buy the first dip. We wait for the second one. We wait for the third one. That's the type of thing that I guess I want to just talk to the community about. So let's begin with the technical analysis, and straight away we're in with the dollar index here. Another incredible bullish week here. Dollar index closes above all the other wicks. You see the rejection wick here, the shooting star as many people call it, that was cleaned above. This led to bullish action throughout last week. We ended up getting a close above all wicks. So now I would expect the dollar index to put pressure on the 93.40. And of course, if the dollar index does start busting through 93.40, that's a good sign that risk is off in the market. So what that means is the only people maybe left is people putting hedged positions in Wall Street, adding positions into, of course, earnings week and earnings calls, e.g. what we've seen on Amazon. And we may actually have a critical point here where the dollar index is showing us an early precursor of things going wrong in the markets moving forward. Also have a look at this. The MACD indicator down here has crossed from the negative to the positive for the very first time on the weekly in quite some time. We got the first reading, we've got the second reading. This is pretty significant. If we actually zoom it out, it doesn't usually last for long without being a false signal. Look at this weekly. It's pretty damn accurate. You might say, oh, Tom, over here, it wasn't that great. Well, if you actually look at the time frame, think about the time frame as well. This was in a very uncertain time, and it only just went. This has already peaked more than this went negative. So just remember, double bottom is in play here very, very soon for the dollar index. If this does breach through, it can mean risk off in the markets, and it's the type of thing that people in Wall Street pay attention to because it's really the money getting flown around. Now, a lot of people on Friday and Thursday sessions were talking about the PCC, and they were saying, Tom, look at the PCC. The puts were out of control on the Thursday closed session. And look, yeah, this is where the PCC ended up closing and how it read. In terms of the data here, I think I always want just people to understand that we use the PCC as a bit of a contrarian indicator. So what you actually want is you want a huge amount of calls to be open. So you want the amount of puts to be less and the amount of calls to be high. Because what that generally means is that most options expire. I think 70% of options expire worthless. So if you're getting a ton of retail traders buying calls, which is what Wall Street ultimately want to do before any correction, then you need the PCC to be low. If this reading is correct, and we'll find out in filings and a few other things soon, and we'll be reporting it here on the channel, the way that we read this is that when Wall Street are starting to stack in their positions towards the short side, what they do is they create like a bit of a crash kind of scenario or a little semi kind of pullback. They add puts in at that point, then they allow the market go back up. They add more puts in and they bring in like a scaled system. Remember, scaling in and scaling out of orders is super important. And that's the laddering style of things that they do before they create a pullback. So it's another little bit of evidence there that possibly there could be some large puts coming into the market on the indices anyway. And that's something that we need to keep paying attention to, because if Wall Street are doing that, then it could be an early warning sign that they're ready to tank the market in the next coming weeks. Buy the rumor, sell the fact style event. A lot of things coming up here in the news for the week ahead. Let's go over here to the US 10 years. So the US 10 year is still at resistance. This is very pivotal, of course, for the banks, and the banks are a lead indicator for corrections in the market. At this stage, it's at the daily 200, at the resistance. If it breaches through and closes above this 20 moving average on the daily next week, then we could see it move back to 1.43. That's going to be bullish for the banks. And if it starts selling off here, of course, it might be bullish for the Nasdaq initially, but it's going to be bad for the banks. And I'll explain to you why that could be something we want to pay attention to. Let's move over to gold. Gold continues to bounce off that 1795 level, has not broken underneath that. You'll notice the daily here is rejected again. If you're a gold bull and you're looking at kind of where can I feel a bit more confident about things, I think you want a closure at firstly above this red line, which is the 20 exponential moving average, but I would actually probably want it above the blue line here, and that will show to us that not only has gold found a great base with all of these wick rejections here, but it's also got the momentum in its favor towards the bull side. It's one of those ones that I'd be watching. I'd clearly watch this level, and any closure underneath here, underneath these wicks, this 1790, 1795 zone, that's going to lead to, you would think, further selling back into the 1760 kind of support. So that could be a real problem, I think, there on gold. Let's move over to Tesla. Tesla's still really hard to read here. It obviously has no idea what it wants to do. Into earnings, we have two key important zones. We've got at the moment our 620. If the 620 previous two lows gets closed below, what's that going to do? Lead to further selling off. I could see us go back to a 560 very easily after that closure happens, if it does occur. And if Tesla have a great result, which, you know, it depends on Bitcoin's price. Right now, Bitcoin's trading about 34K. So at least it's come up a little bit in the last kind of 72 hours. But if you do get above the 690 zone on a daily close, I think that will then trigger quite a lot of buying. And that buying is going to go fairly hard. I would say if Tesla does kind of flip the script a little bit, to be said there, it might go to a 780 after the 690, 700 close. So two key zones to be watching. It all comes down to the earnings. And as we saw, that's going to happen on that Monday session. Move over to some of the indices now. We'll start off here with the Russell 2000, and the Russell 2000 shows us as traders, as investors, a bit of an idea about how healthy the economy really is. And at this stage, the Russell 2000 is in consolidation. Basically, it has had a huge movement up, one of the best returns in all the indices out there, and it is struggling at this point. The part of the reason it's struggling is the US 10-year. The Russell 2000's made up like 21+% is financial. And if you have small financials in there and you've got a lowering 10-year rate, what that means is it puts a lot of pressure on those banks to make profits. So at this point, it seems to be making a series of lower kind of peaks and lower troughs. If we do end up closing below 208, to me, this is a huge bear signal in the markets, and I think the bears have taken control. It's an early warning sign. Remember, right now we have dollar index going long, risk off potential for the market, or just reprice. You know, we don't know from one indicator. We've got August, September, bad month. We've got breadth, not so great. And then of course we've got IWM. If it did close below here, would be a very strong signal that things are not all that they seem. To go with the IWM, we've also got JP Morgan here. This is a head and shoulders style pattern. Now, has it completed? Has it even started? No. And this is the importance of being able to use patterns and understanding the importance of the close. A lot of people are probably jumping the gun here and seeing this pattern and thinking, oh, I'm going to short these banks, guys. I think these are going down. Now, you could put a strategy behind that might involve options that has a certain risk parameters to it, but it's not good to preempt the market. It's better to stick with, have we got the confirmation either way? And at this point, we don't. If we close under the 146 kind of 50 zone and get a nice closure under there on the daily, does that trigger a head and shoulders? From a technical perspective, yes. Would that be negative to the market? Generally, banks lead the market itself. If a bank is finding huge kind of selling pressure, most of the time that will enter a correction. I want to repeat this. I believe that the next pullback, while it may be 10, 15%, it's very possible. I don't think it is a crash. I think we're in a longer term end of a bull cycle here that may go quite a few more years. Now, you may disagree with me, but I've done quite a lot of like cyclical analysis on it. Maybe I'll cover that on the channel sometime. And I just don't, at this stage, see this ending anytime soon. I see us going into years of, let's call it like the roaring 20s, but pretty good returns. But you won't be expecting 30% out of an index every single year anymore. I just don't think that's going to happen. I think it's going to be more, you know, slower gains, that kind of 7 to 8%, which is still a very good gain on the index. And people are going to have to get used to trading more in that and picking specific companies that they like during what is going to be a transitional process for many economies around the world. Let's move over to the QQQ. What a close, guys. Look at this daily. Boom goes the dynamite. Mass new high. Didn't even think about it. In terms of how do you trade this, how do you conceptualize where it's going? Well, we do have our daily trend line here, which is going to probably be hit this week through earnings. So that's going to be something that we'll look at. You want to go down to a time frame as well, like maybe a 2 hour or a 4 hour, or whatever's making sense, and find moving averages that it's been bouncing off. So you would argue here like the 1 hour 50 has been quite good in the previous run until it did get underneath that and cause that sell-off. So what happens if we get a bit of a run here in the market and then it comes down and it hits kind of this previous resistance at the same time there's a 50 moving average? Is that going to be a good swing trade for a lot of people? It's the type of opportunity you do look for based on the previous bits of information. We also know that the 20 worked. So if the 20 came down during the week and it hit the same zone, do we then see a lightning bolt on the 5-minute, on the 15-minute chart? When you kind of see those types of setups, you can make a better informed choice about whether you want to follow the trend. Remember, following the trend is still best. Even if it hits this resistance and you say, oh, I want to start adding shorts for whatever reason, then you still want to usually be waiting for a peak, a trough, a lower peak and a lower trough, a double top, a head and shoulders, any of those types of things to show you that the market has considered the level and it's ready now to confirm the downtrend. Move over to the S&P 500. Again, incredible strength here coming through from the market. I wouldn't be surprised at all for a little pullback into the previous peaks and then hopefully some further bullishness. You'll notice here the trend line that we've been using, which is why we're cautiously optimistic right now in the bull market, is not even close to being hit just yet. So imagine if we get some amazing results here on the big ones, Microsoft, Apple, Amazon this week, and then we have this ferocious bull move that creates like an excess phase. It hits our top of the trend line. Wouldn't that be fantastic for a lot of bulls out there? That could be a very real scenario. So we'll be watching that. Bear side, well, we're not there yet. We're going to have to keep covering the market before we see anything like that occurring. But new peak, interesting. Look at the volume. Look at, of course, the banks. Look at the 10-year. These are the things that we'll be watching. TLT, another one we're going to be looking at. This is the 20-year bonds. So the 20-year bonds continue just to hold a nice steady uptrend here. 2 steps forward, 1 step back, 2 steps forward, 1 step back. Every time it's hitting this 20 or around there, it's finding buying pressure. That's a good sign, again, for people that are kind of looking towards the risk-off approach, because if the 10-year bonds or 20-year bonds in this case are going up, what that means is the bond market's generally smarter than most people think. And if it's moving early and it's starting to really ramp up, that's Wall Street taking money out of cash, taking money out of potentially, of course, equities across the world and pulling it into a more defensive style asset. And yes, I did inverted commas there because we know that the bond market is in some ways quite ridiculous. Why I bring this up? Because the bond market started moving before the crash last year. Notice here, we find out about the pandemic 15th, and I've said this on the channel before, then all of a sudden it keeps going bullish and it preempted the fact that the market was weakening. So that's why I never discount the bond market. You always need to be looking at it. Let's move over now to the US 30. Now, this is another very interesting chart. So we saw a new peak get broken, but it didn't get quite past this resistance. Will it unleash when we get past the 35,000, what is it, 10 or 100 or something like that? This zone here, wowzers. So we have big Dow stocks this week announcing. Big Dow stocks, huge resistance, great trend line coming through. I'm looking for, some superior growth coming out, hopefully, for the Dow here. And if it doesn't occur, well, we know where the bears are going to get back control of the market. If it comes back down, breaches through this very solid trend line that's been going on for weeks now, that's going to be, again, another early warning sign, or even a warning sign itself, that the market is not very healthy or heavy. So yeah, this is the kind of area that we're looking for. I'd love to see a closure, pullback, movement up. I'm not saying 37, but definitely 36 would be in line with a lot of the others. And it all comes down to earnings. I mean, that's what we're in. We're in earnings week right now, and it's the most important earnings week that we've seen in some time. With those kind of companies, you just cannot not look at them. You have to watch Apple's results and Amazon's and Microsoft's. We spoke about our lives room as well, and how we've got like a whole bunch of feeds that post through a whole bunch of options and equity prints. I can tell you that there's been a lot of purchases going on for Amazon, for Apple, for Microsoft, for Google, all of those have been going hard. And that's probably partly due to the reason why all of these stocks have been moving up so heavily recently. Just the amount of huge equity prints are there. We could also look at the, kind of devil's advocate side of things though and say, well, are people buying that much stock, or are they instead buying short dated calls to take advantage of a nice kind of potential earnings period without putting in more risk for their clients and then instead buying the bonds? All of these arguments make sense. We're waiting for a clearer picture. For now, bulls are still in control in the market. Let's look at Ethereum. Ethereum hit our first take profit here. This was the 2180 zone. Congratulations for people that had that 2200 or just underneath zone. It just shows you the importance here of waiting for the key zones. We get the breakout. We get the closure above the 20 moving average here. We went pretty much bullish at that point on this market and it moved up. So Ethereum's done really, really great. And then we move over to Bitcoin. Again, another one that's done incredible. Long leg doji decision, and it's back at the resistance. If these keep doing this stuff, they are fully reversing all this negative signaling that they've had. And, it never got underneath these wicks. If it did, it would have been bad. And I would still have alerts underneath here, because if you ever get underneath these wicks here, guys, and close on a daily, this thing's getting slaughtered. I wouldn't be surprised for it to get down to 20,000 or worse. So there's a lot going on in the markets right now. It looks bullish here for Bitcoin, but I still think the big problem with Bitcoin is going to be if the government start getting into those stable coins. And I don't think it's really if, it's when. And they will get in there. And when they do, I think the initial response is going to be bad from the market. And I think the long term, I've talked about how that, I see it as a bullish thing overall. Lots of cool stuff going on this week. Heaps to cover. Of course, make sure you get your economic calendar out as well. If you don't have that, I'll bring it up right now for you. Let me just quickly get one. You can use Forex Factory. You can use Market Watch. You can use whatever. And basically, you just put down the week ahead, and you can see here all of the big things coming out. You make sure it's set to your time frame. And unfortunately, what have we got this week again? We have the FOMC press conference and FOMC statement Wednesday, 28th of July. And then we've got advanced GDP. I don't think that's going to be a huge thing. And then, of course, after that, we still have core PCE price index and a few other bits of news. Usually some of these things don't matter. Obviously, FOMC statements and press conferences always matter. It's going to be a critical week, though, I think, from the earnings side, even more than this one. Let's find out. We'll be covering it here. Remember to subscribe, hit that like button if you enjoy the videos, guys, and we'll see you in the next one. Bye for now.